All right, everybody. It is Wednesday. We are coming to you live from Investing Education Academy. Let me do a little bit of housekeeping. And Leon is going to tell you the topic for today and why we chose it.
Yeah, so the topic for today is the Robinhood IPO. And the reason we chose this is because this is probably, if it's not the most anticipated IPO, it's the second behind Coinbase. Coming into the year, Coinbase. Yeah, right. Coinbase, right. Coming into the year, Coinbase and Robinhood were the two biggest IPOs that were released on like retail investors' minds. And I'd probably say it's more so for Robinhood because we being retail investors, we have more an association with Robinhood in that, Robinhood's been around a lot longer than Coinbase. And so we've known Robinhood a lot longer. And, the whole meme stock thing that happened last year or beginning of this year was all driven mainly by Robinhood. So Robinhood has really been a really anticipated IPO by retail investors and also by Wall Street, because Wall Street knows the retail investors are heavily invested in Robinhood via the amount of accounts they have, and we'll cover that in a minute. But also they're affinity to meme stocks, right? So the meme stocks thing, the whole meme stock revolution happened because of Robinhood. That's where most of the trading for the AMC, the GME, GameStop, and AMC were the two big ones. And so, this is a really large tie and a really big affiliation with Robinhood. So it's really been anticipated. And also the fact that Robinhood has brought in this whole new generation, not alone, but essentially brought in this whole new generation of retail investors. A lot of them joined in the pandemic, March of last year was the first time a lot of them actually got into the market. And most of them did it through Robinhood. I mean, Robinhood went from March of last year, they had around, March 2020, they had around between 9 and 11 million accounts. Today, they have 22 million accounts. So they've effectively doubled, grown by 100% in a year based on the pandemic, based on everybody being home, and based on everybody needing to either make money or to supplement their income. But most of these new investors were retail investors and really were millennials, people that are like under, between like 40, like 18 and 40. So that's their home base is Robinhood. So that's why it's been really anticipated.
Robinhood, one of the things, Robinhood changed the industry. So if it weren't for Robinhood,
that too, that very good point. Yes,
Robinhood, like when they came out, their disruptive business model was that they were going to have no fee trading. And although they got some slack later on about how they were able to accomplish this, we're not going to talk about that. But the reality is they created a pressure that has reverberated throughout the entire trading ecosystem. And so many of you all who are on different platforms, be it E-Trade or IB, what's the investors?
Interactive brokers.
Yeah, interactive brokers. If you're on these platforms, you want to thank Robinhood for putting pressure on these what were very traditional trading platforms that were not looking at, definitely letting people charge at no cost. Now letting people charge at no cost. Thank you, Robinhood.
Yep. Yeah, because before Robinhood, we used to pay. Brent and I started investing when we were in middle school, and I remember.
No. We were 16.
Sorry, high school. Sorry,
high school. I was like, whoa.
Yeah, no, that was pretty much, yeah, high school. But I remember back then, this is what, the early 90s, commissions then were like $9 in and out. So you pay $18 round trip. When you bought, you would pay $9. When you get out, you pay $9. By the time Robinhood came along and killed off commissions, it was down to like $7. So you had to clear roughly between $14 and $18 in profit before you would not. You had to break. The way you broke even was clearing either $14 or $18 in your investment before you broke even. Then you can go into profits. Whereas now, if it goes up $1, you're now in profit because there are no commissions. Yeah. So that's one thing. That's one reason I don't. Their platform to me is just okay, but the fact they changed the game and got rid of commissions, made the industry get rid of commissions. I always have a certain love for Robinhood because all the other brokers had to follow suit. And like I said before, they effectively doubled their accounts from about 11 million to about 22 million now in a year. And largely because, again, the pandemic, everyone was home, but because there were no fees, right? Before that, you had Fidelities, the TD Ameritrades. I used to use TD Ameritrade, and I remember paying like, $7-8. I used to look at Robinhood like, they don't charge anything. Why am I not moving my money there? I was kind of skeptical because I was like, well, if it's free, does it really work?
And Leon, let's mention this too. When we first started, and I'm not even sure if you remember, but it was about $9 or so, up to like 50 or less. And if it was above 50, it became like 0.1 cent for every share above. Do you remember that?
Oh yeah. It would be incremental. Yeah. Mm-hmm.
And
yeah.
So it was
that was back in the day. Yeah.
Yeah. So it was tiered when we started, but what that created was a barrier to entry for a lot of people. And so that barrier to entry like stopped, especially the small investors who were just dollar cost averaging in, or just putting in a little bit of money at a time. For those who don't know what dollar cost averaging is, it's when you put in a systematic amount of money into the market over a certain period of time on a regular basis, like monthly, weekly, whatever it may be, no matter what the price is. That's considered dollar cost averaging. And those individuals who were like, that's what they wanted to do, even if they didn't know that's what they wanted to do, they weren't investing because they were like, oh, there are fees every time I do anything. And so they just didn't get into the market at all. And, by and large, they were minorities. Mm-hmm. So, you really want to think about just the impact of, that's not what we're talking about today. We're talking about the IPO, but you definitely want to think about the impact Robinhood has had. And like Leon said, they're probably the second biggest, or not if the biggest IPO over the last 19 months, except for Coinbase. And, that while we're talking about this, shout out to Picture It Possible. Yes. If you aren't familiar with Picture It Possible, Leon and I did one of these lives. And while we were recording our podcast, one of our my clients actually created this live while we were talking about the Coinbase IPO. She created a visual representation of the meeting we had, and we had that visual representation put up as a poster. So if you are out there and you're doing meetings and you're thinking, how can I make my meeting, live beyond just today? Picture It Possible. You want to go there, pictureitpossible.co, and book her. Again, Belinda, thank you so much for this. Leon's artwork is on his wall, and we will keep it up here for a very, 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 very long time. So now, back into...
So the point you made about commissions, but think about this though. So like, today we can all buy any stock. If it's Amazon, you can put in $5, you can put in $3, whatever, however much you have. But think about it. Before, if you put in $100, you had to clear 14% of the amount you put in before you even broke even. Because if you put up $100, you had to clear, it was $7 in, $7 out, right? So until you actually made a profit, you had to clear 14%, $14 you had to clear in profit before you're actually making money on the trade now. So that, that's a pretty big barrier to entry for people like Brent said, minorities that have a lot of money. And also, so remember two things: one, you had commissions, and two, there were no fractional shares. So it was just all types of crazy before. But now Robinhood has brought in no commissions, and they've ushered in fractional shares. So they've done a lot for the game, especially to allow minorities, retail investors to get into the market. Unlike before.
Yep. So let me pull up this.
So all right. So what we'll cover today is the IPO, right? And this is so first things first. The IPO happens tomorrow. So Thursday morning, the Robinhood will go public. Now, typically, we've said this before, there's something called the discovery phase. And so what happens is, a lot of times people are like, oh, they try to go buy it in the morning, they couldn't find it. Well, at 9:30, well, that's because it hasn't started trading yet. Because what happens is with IPOs, there's called a discovery phase where the big firms on Wall Street, the hedge funds, the market makers, they all have to come together and figure out what a baseline price is for the stock. Now, I have some updated information that just crossed the wire like an hour or so ago, is that Robinhood, so they raised they raised a little less than $2 billion, and the share price was $38 per share. So, and that equals a $32 billion valuation. So again, they raised a little less than $2 billion. The share price, the IPO price is $38, and that gives them a $32 billion market cap. Now, the $38, it's not going to open there, right? That's what this discovery phase is in the morning. Market makers, everybody can get together. That'll probably jump. It may open up at $50, $60, $70, right? But the IPO price, the actual IPO price is $38. but we'll definitely see that, it jump, maybe even double that by the time it opens. Probably, and typically these things open between like 12 and 2 o'clock. So if you're looking for it, I would look for it around there and start really paying attention around between 12 and 2 o'clock is when they actually open. But so on the screen now we have our slide here that's going to go through just some of the facts around Robinhood, the company. So first things first is the ticker symbol. The ticker symbol will be HOOD, HOOD, HOOD. I like that one. Second fact is that Robinhood is the second largest brokerage firm in the United States. They have 22.5 million accounts. The number one broker is Fidelity at 30 million accounts. And the number 3 broker is Schwab at about 12 million accounts. So Robinhood's only been around for less than 10 years, and they are the number 2 just behind Fidelity, who's been around for like 100 years. Shows how their growth has been just insane. Third point is they're not managing, they hold over $80 billion in customer cash and stock assets. So, people's deposits in the brokerage accounts, plus the stock they own, equals up to, about little over 80 billion that Robinhood has under, it's not under management because they're not actually managing money, just sitting in their accounts. In 2020, Robinhood made $959 million in revenue. So they basically did $960 million in revenue in 2020. And from that $959 million, they netted. So Robinhood is actually profitable, right? This is rare to have a tech company that's actually profitable coming public. They netted $7.45 million in 2020. So again, profitable tech company is very rare. Now, in the first quarter of this year, the company generated $522 million in revenue. And check this out, the fourth bullet. All of 2020, they made $959 million. In 12 months, they did $959 million in revenue. Just in the first 3 months of this year, they generated $522 million. That means they're on a revenue run rate for this year to do upwards of over $2 billion in revenue versus only $959 last year. So this just shows, again, the incredible growth that they've had. And again, a lot of this is because of the pandemic. All those, those 11 million more subscribers or users that joined their platform last year, is basically the cause of that. Now, will they have it again this year? We don't know. But that's a huge number. They went from 959 last year, the whole year in revenue, to 522 just in the first 3 months of this year, which is, again, a $2 billion revenue run rate for this year. So how their revenue split up. So options covers about 38% of their revenue. Stock trading covers about 25% of the revenue, and crypto covers about 17% of the revenue. And the last point is pretty key, is that in the first quarter of this year, they actually lost $1.4 billion. And that was related to the whole meme stock issue. Now, I don't know how close y'all following me like I was, but during that time, the GameStop thing was happening, it was going through the roof, AMC, a lot of these stocks. And what Robinhood basically, it stalled. Like it was too much traffic, it was too much trading going on. The app slowed down, and at some point you couldn't even trade on it. And also the SEC came to them and said, look, you need to raise your cash reserves. So they had to go out and raise $3 billion, I think in February. So all that craziness during that first 2-3 months of the year, they actually lost and we're talking about in net, not in revenue, but they lost $1.4 billion. So that's basically the nutshell of Robinhood's kind of fundamentals right now. They were profitable coming into the year. As of the first quarter, they're not profitable. They're not profitable. But I don't really think that's that big of a deal, because the thing that happened with GameStop and the meme stocks in the first quarter, that was kind of like a one-off. That's not going to happen every quarter. So going into the second, third quarter of this year, we'll see, if they return to profitability or not. But overall, when I researched their fundamentals, I was actually surprised at their revenue growth being just insane, and the fact they were profitable. So, of course, number one question is, do I plan to buy it? I do not. So here's some of the risks. I'm not a fan. So there's something called payment for order flow. So the way Robinhood makes their money is, of course, we don't pay commissions. So what happens is they make their money when you and I make trades. They send our trades to what are called market makers, and the market makers then pay them for that order. There's talk in the SEC and in the government that they may actually one day do away with payment for order flow. So essentially 99.9% of Robinhood's revenue right now could go away in a couple of years. Will it? We don't know. But it's a huge, huge risk that the SEC is not a fan of payment for order flow, and they may actually get rid of it. In some countries, I think either in Europe or some parts of Europe and in Asia, payment for order flow is actually it's outlawed, right? So the U.S. is one of the few places that actually allows payment for order flow. So that's, I mean, I'm not a fan of that, and I'm not a fan of I'm just not a fan of the brokerage business in general. It's typically a low margin business. Robin, I mean, you can see it here. Their revenue was $959. They only netted $7.45 million. Now they did net, so that's a good thing, but it's typically a low margin business. But my main reason I do not like Robinhood here is because of that payment for order flow model, and that it could go away in a couple of years. So that's a huge risk.
Yep. And so you might be thinking, well, what about you, Brent? And so I will be buying Robinhood just to hold it for 2 or 3 years to see what it does. Also, they are moving, and they've been a disruptor since they came into the business. And I love looking at management and how creative is management at staying in front of trends or creating the trend. Robinhood has already proven themselves to be willing to buck a trend and be a disruptive business model in the trading space. And as we know, most of the disruptive business models, Uber, Airbnb, Amazon, these are the biggest companies on earth. And so if you have that level of management that is staying ahead or creating the trends, I always like to reward that. And I feel like the creativity, more so than the actual current revenue model, can change. So with the thought that they're also bringing in a platform to make them a wallet versus just this current cryptocurrency trading platform that, just stores cryptocurrency kind of in their name. Truthfully, it's in street name. It's not in your name. So I don't like that about Robinhood. And I also cannot stand the fact that they don't have a direct 1-800 number. And so these are just things which is probably the reason Fidelity is still holding the number one slot. But I cannot deny that their creativity from a business standpoint is let's go where the money is. And when again, you think about a large portion of millennials are trading, or people really are trading cryptocurrency, limited, very limited selection of cryptocurrency, but they're trading on Robinhood just from a familiarity standpoint. And also you got to think about the number of accounts that they have outstanding. When you have 22 million accounts that in existence, that's a large number of people to be able to talk to. And again, thinking about changing business models, when you reach that fork in the road, a company that only can reach out to 10,000 people or maybe 1 million, it's only so much you can do to create new revenue. When you can reach out to 22 million people via their accounts, and those are just people actively trading with Robinhood, not actively, but they have an account established. There's probably in their ecosystem close to like 1 billion plus of people they can contact. That equals money. And the more people you can reach out to, the more likely you are to be able to create new streams of revenue. So I think they'll do okay. So
and that's when good point. So that's when I also make the point that they so not, I said 99.9. That was a guesstimation. They also, the super majority of their money comes from commissions, but they do also have like kind of like a banking kind of custodial side and a margin side. So they have a platform called, I think it's Robinhood Gold. Whereas if you join that, you pay $5 a month and you get access to margin, and I believe even like interest on the money that you have deposited in their accounts that's not actually in stocks. So they do have other revenue sources. Like Brent said, they could add new ones in the future. But right now, I would beg to say that even overnight, 95% of their revenue comes from payment for order flow, where those market makers pay them for them to send them our orders. And again, the SEC looking at that, saying that possibly could go in the future. Like I said, it's a huge risk. But does it go away in the future? We don't know. But yes, they do also have other revenue models also.
Yeah, I think, and for just those of you all who aren't familiar with brokerage accounts or brokerage houses, brokerage houses make money off the people who have accounts with them. It might be in fees. It may be on the money that people leave bank with them. Because again, that money just doesn't sit. When you put your money, even in brokerage houses, they're investing, they're trading, they're making money on your money. Please understand that. It is not just sitting in an account with your name on it and your name written on every dollar bill. So when you have 20-some million people leaving these small amounts of money in the account, they actually can create revenue from that money sitting. The reason why I say that is there are a number of other reasons, number of other charges and or commissions they make on money that's invested with them. Robinhood, I want to say last time I checked, which was a year ago, they were 30 times more profitable per account than any other brokerage house in existence. Like the amount they make per person who has an account was like 30% higher. So it was a very small amount of money though. But let me be clear. It's a very small amount of money, but it shows that, you know, they do have some efficiencies and they are finding creative ways to make money on accounts, some of which got them into trouble. So again, we do understand they have to work through some of their issues, but in the long run, I think they'll be viable.
Yeah, and those issues. I mean, they've paid close to $100 million in fines to the SEC for different violations, they supposedly misleading customers, their technology not being up to standard, not being up to code. So they've burned a lot of bridges in the regulatory space. But again, you can't deny 22.5 million accounts and a company that did 960 million in a year. Now this year's on a revenue run rate to do over 2 billion and was profitable coming into the year. So like I said, it's not for me. I'm not looking to get into it now, but it's Brent is. But it's if you're again long term looking out a couple of years, you have some dry powder sitting around. Take a shot. but like so, I want to reiterate. If you want to buy this, you're not going to be able to buy it at 9:30. It probably will not come out and hit the market till about between 12 and 2 o'clock. So if you're looking for it, start to look for it around then because that discovery phase has to happen. But once it goes out, and I'll be tracking it, and I'll be letting the IEA community know, kind of where it stands when it comes out as well on the membership platform. So yeah, just know that you won't be able to buy it first thing in the morning.
And for those of you all who bought it through Robinhood's program, I think you got locked in around like $40 a share. So we'll see what happens tomorrow. And I think there's just like most IPOs, it's going to go in a tear. There's going to be a pullback, and then people are really going to decide in like 2 months what the price should be. Just my thoughts. Not saying it'll happen. Just my thoughts. Yep. So we owe you 2 stock picks, and as you now know, you have to go over to Investing Education Academy, the Facebook group, to figure out what those 2 picks are going to be. And I got to say, again, thank you to Belinda Jackson from pictureitpossible.co for providing us with a visual representation of one of these lives. And if you have meetings, if you do conferences, if you have a church event, if you're trying to, really get an idea out of your head, visual representation of what you're thinking about cannot be beat. So,
Brent, take down the card so you can get a fuller screen. The screen share.
I was like, is that good?
Nah, I still see the card. You still sharing the screen? Yeah, there you go. Cool.
So here's the Picture It Possible end product of one of our lives. And if you do any type of event, again, I would suggest going to pictureitpossible.co so you can get a visual representation of your next meeting. And you can create artwork from it. So thank you, Belinda Jackson. This is awesome. If you want our stock picks, please go over to the Facebook group. And if you're interested in joining the IEA Crypto Bulls, where we talk all about cryptocurrency, and it's been all over the place for the last couple of days. It's just been ridiculous, but in a beautiful, scary way. So as you know, there's some things are happening with Bitcoin, and we're going to have that conversation. Next week is our next Monday is our next meeting. So if you want to be there for our mastermind on cryptocurrency next Monday, you have to go to IEACryptoBulls.com and join. We're at 17 slots right now. We're leaving it open to 25. So we only have 8 more slots left. And once those 8 slots are left, currently the price is $200 per month. It goes up to $300 per month. For anybody who's after the next 8 people who join. So we look forward to seeing you over there. And if you want to join Investing Education Academy's main body platform, you can go to IEAnow.com and join. And because we're still celebrating our anniversary, We have some extremely amazing discounts available, anywhere from 20 to 50% off a membership. We highly suggest you take advantage of it. And for those of you all who have the question, yes, once you join, you are locked in at that price. When the sale is over, you will still receive that price for as long as you are a member of Investing Education Academy. So thank you for being with us. Leon, did I miss anything?
No, just that if you want to, again, find out our stock picks, just go to Facebook and search Investing Education Academy. Our group will come up. Just join it, and then you can see all of our picks for this week and our previous weeks.
Yeah, and also too, let me show you all. This is me.
Yeah.
This is Lena. So you can notice from the goatee. And also, some of you all have sent me a letter saying you want to see the back of the shirt again. So this is the back.
Yes, sir.
And that's everything. So we'll see you all next week. Until then, keep investing and stay away from those savings accounts. All right, everybody.